more on this and also what it means for the local market. Cameron Peacock joins us from IG in Melbourne. Cameron, good to see you there. So, the Fed's delivered. The expectations were for something like this, although interesting to get that target of that 6.5% unemployment rate, at which point it believes that it can start moving rates higher again. But just give us some context about what the Fed was saying and the reaction too on Wall Street.
Yeah, good morning, Bridie. Look, as you said, the Fed delivered largely what the market had been expecting. They've announced the new, Treasury purchase program where they're going to purchase $45 billion per month, starting, in early January. That's obviously going to replace Operation Twist. That will be in addition to the $40 billion of mortgage-backed securities which they started buying back in September. All that was largely in line with expectations. What the Fed did do, though, was finally deliver some context to the low to zero rate interest policy, low rates through to the end of 2015, which has been in place for some time. Now, there was never any real sort of context or parameters to that, and the Fed have finally delivered that by announcing that they will, keep rates at current levels until we see unemployment falling below 6.5% or inflation looking out 1 or 2 years being above 2.5%. So, the market now has some firmer parameters to move to, and I think the reason we saw the sell-off after Bernanke spoke and announced these measures was that, the market is pricing in that rates may in fact rise earlier than 2015. If you think about it, the unemployment rate is currently 7.7%. If the US economy starts improving, we could quite easily get back to 6.5% well before late 2015, which is still 3 years away, and I think that's why the market sold off on the back of it.
Just looking then, I guess, at what to think about for our market, SPI futures just up fractionally. What do you think? What are we going to see and the Aussie market open?
Yeah, look, obviously yesterday we briefly traded above 4,600. I think 4,603 was the high. We pulled back to close at 4,583. Not all that surprising. We have had a fairly strong run in the last couple of weeks, and when you get to those big round psychological numbers like 4,600, you often do see a little bit of profit taking because there's a lot of sell orders up around those levels. So we did pull back a little bit last night or yesterday afternoon to close at 4,583. As things stand at the moment, we're currently calling the market up about 8 points, or about 0.2% higher, up around that 45.91 level. It wouldn't surprise to see the market just sort of drifting around a bit today around those current levels. We could finish, 5 or 10 points higher or 5 or 10 points lower. We did see across the board, though, a bit of a risk-on thematic continuing. We saw base metals all continuing to firm. We saw the iron ore price up another 10 cents last night, now currently trading at $125 a tonne. We've got BHP's ADR called fairly flat today, down about 2 cents. But we did see the Aussie dollar last night continuing its strong run. At one stage, edging up towards that $1.06 mark. I think it hit a high of $1.0586. Currently in the sort of 105.60s. So, the risk-on thematic is still there, but I think there will be a little bit of cautiousness across our market today.
All right, Cameron, thank you so much for that.
Thanks, Bridie.
Cameron Peacock there from